Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to talk about Teladoc, which is a telehealth company, ticker symbol TDOC. So Teladoc Health is currently priced at $174 per share. Past year, you can see the upward trend, currently up 191%. Past 5 years, up 482%. Scrolling down a bit, market cap is 12.97 billion. P ratio does not exist because they're not profitable yet. And dividend yield is 0, which means they're reinvesting all profits back into growth. Taking a look at analyst ratings, currently 46% is a buy, 50% give it a hold, and 4% give it a sell. Now, in terms of earnings, you can see that Q1 2020, it missed actual EPS. Actual EPS was below expected EPS. So as I mentioned, Teladoc Health is in the provision of telehealth care services using technology platforms via the internet, video, and phone. So it allows you to connect with a doctor over the internet. Taking a look at the actual earnings report, this was for Q1 2020. So you can see year over year, Q1 revenue grows 41% to $180.8 million. Total visits increased 92%, which is solid growth. This is to 20 million users or 20 million visits. And in terms of guidance, they're providing updates. A lot of other companies are not providing guidance because it's hard to predict, but Teladoc Health, being that they have such strong demand, they're able to give some insight into where they're at. So in terms of their revenue, as I mentioned, up, let me see, total, so US, so subscription access fees revenue, US was up 33% year over year, international was up 17%, and total was up 29%. Now in terms of visit fee revenue, 69%. If it's only visit fee only, then up 205%. Overall, up 93% total. That's including the international. Total revenue, as I mentioned, that was up 41%. So overall, very solid growth year over year from 2019 to 2020. Now, in terms of their total US paid membership, up 60.8%, and in total US visit fee only access, up 88.7%. Now for the visits, this is in thousands. So for paid visits from US paid membership, up 77%, which is insane growth. Percent paid visits from US paid membership, down 8%. Visits including from US paid membership, up 109%. Now total visits from US paid membership, again, up 93%. Let's see, visit fee only, up 263%. Now if you scroll down a bit, net loss was down 29.6 million for the first quarter 2020 compared to 30.2 million. So they're still not profitable, but there's not losing as much money from before. 32 million versus 29.6 is negligible. I mean, they're still not profitable, which is why I'm not investing in them. Gross margin was 60% for the first quarter compared to 65.3%. So it's getting better, actually getting worse, probably because they had to spend more with the recent circumstances. This is more of a growth story, not profitable. But I think as they scale with more users and they have a more established platform, then they'll be profitable. So taking a look at the Investor Day overview slides, this is just some investment highlights. They're the leader in this telehealth space across multiple channels, and the only comprehensive virtual care solution. So they have different verticals in this space, and they position to broaden role in healthcare delivery, and they're trying to grow their revenue. That's already pretty strong. Still not profitable though. And they have some pretty solid shared values, trying to care for people, provide quality. They keep their promises. They have strong integrity, accountability, and transparency, and trying to do what's right, creating value for their patients and providers. In terms of the presence, they're a global virtual care leader. They're 450 subspecialties in the medical space, 2,400 medical employees worldwide, and 40 languages spoken. So they care for a lot of different patients, different backgrounds with different needs. And they have 50,000 clinicians globally. So a lot of value they can provide to patients for both providers as well as clinicians. So their strategy is to provide more clinical scope as well as provide distribution and markets. So as they increase, ever since IPO to now 2020, they're trying to provide site-based telemedicine, Medicaid, Medicare, in-touch health, nutrition, high acuity telemedicine, lab testing, virtual primary care, text, chat, general medicine. So more features, more scope, and more distribution and market. And also looking at their health services, what makes them the leader in this space. There's some differentiating assets, so their quality, their product offering, the scale-driven return on investment, data and analytics, tech-enabled ops at scale, global distribution channels, multiple specialty physician networks, and member engagement. And in terms of their sites, they provide full range of acuity and care sites. So you can see on the left, everyday care, chronic care, and critical care, which is the most acute, using InTouch Health plus Teladoc Health, and the sites of care ranging from home to work site to pharmacy, retail clinic, physician office, post-acute, ambulance, ER, and hospital. So a wide range of services they provide with different acuity. And you can see their strategic positioning drives competitive advantage. So you can see the more acute versus chronic and complex, from software enablement to clinical services. So in those four quadrants, you can see that there's virtual staffing, chronic care management, remote monitoring, and EHR vendors, plus electronic healthcare records. And that allows them to play a central role in how medical care is accessed, enabled, and delivered. The Center of Excellence, primary care, and multi-specialty practice. And they have some pretty solid growth pillars that are very strategic to execute their vision. Compelling financial model, expand footprint and distribution, clinical service innovation, and accelerate consumer adoption. It's a very, very strong, solid strategy. So the compound effect of investments in business, you can see that more members, more products, more utilization, more payment models. So this is definitely a network effect. The more users, better products, more use, and more payment models. And they're definitely headed towards a multi-billion-dollar journey and striving for profitability. So hopefully in the long term, they become profitable. That's all for this video. What are your thoughts on Teladoc? Comment down below. Remember to use more referral links below. Both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.